Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, the third day of September 2015, and this is the Daily Report for Gold and Silver. We once again have precious metals under pressure, specifically gold, off about $8 to $9 on the day, currently off about 8 at 11.25.24. We've seen it trade to a low of 22.07, the high today 11.34.36. We did have an active trade in the market. We did have a stop. That stop was sitting just below 11.29. Traders who were in that particular trade did get stopped out at, call it 28, for a small loss on the trade. We'll talk about that in a little bit. Let's first take a look at silver. Silver today is trading in essence unchanged. When we take a look at it, you can see that it's up about a penny to 2 pennies, 14.68 and change. It has had a low of 14.58 and a high of 14.96, so we have seen a pretty big range today. We'll talk about silver towards the end of the show. So traders, I do want to start today's show by taking a look at this daily chart. Standard candlestick format, we have a couple of different levels of Fibonacci retracement in it, but we also have a 50-day moving average, a long-term moving average. And a couple of the rationale or the reason behind putting our stop on this last trade at 29 was, one, it was my belief that we had a critical area of support roughly at 31 to 33. That's based on a harmonics in terms of the Fibonacci retracement. And to see that, we've got to kind of tighten this up a little bit like this. But you can see that 33 here is a 38%. Here it's a 61% retracement, both showing the same numbers. Whenever we get something like that, I term it a harmonics. It's a much more important level because of the fact that these numbers tend to correlate. The second thing is that when we look at our 50-day moving average, there's no doubt that sits at about 28.20. 11.28.20, and we're below that at 24.50. So the fact that we have absolutely broken down below this 50-day moving average, to me, doesn't bode very well for gold in the short term. It has, in my opinion, broken through some critical support. We had a nice small run up, but we got absolutely no follow through within this marketplace itself. Now, one of the other charts that we were looking at, and this is actually one of the charts that I looked at when we actually initiated that long position itself, was the fact that when we looked at the MACD, and that's sitting at the bottom right now, it was beginning to cross back up right in here. In other words, we went into our sell mode. That corresponded to this sell-off here. We found support. Support was at a logical point to actually find it, and then we had the market begin to move back higher. And that is when we saw this MAD start to hook back up. But as you can see right now, it is now crossed back below and is really technically in a sell mode. And so as we go into the jobs report tomorrow, we could have some really increased volatility. Of course, we're going to sit on the sidelines till after Labor Day and kind of let the dust settle here. But I did want you to see how this chart is really dynamically turned 180 degrees. So traders, the next chart that I do want to take a look at, this is a weekly chart, standard candlestick format, does have our current Elliott wave count, and it also, we've looked at a couple of the candlestick patterns that developed even on the weekly chart. Wave 4 completion, this is the completion of wave 5 according to the system itself, which would put us into some kind of an A, B, C scenario, which is why I'm looking at the upside as having some potential here. We also talked about the fact that we had a pretty strong pattern, which at this point has not really seen the follow through that I'd hoped to see, which was this 3 river morning star. And it was a 3 river morning star really capped by double stars down here. And typically when you see this kind of activity, you should get a nice spurt. Now, in terms of where the market failed, if we look at the level that it failed at, which is roughly at the 60-70 level right here, we kind of put it across. The only thing that we see is some noise here and here. We don't see a real solid area except for these lows that came in here, and they were obviously the lows in terms of a technical level that this market could not take out. roughly call it 71 in that area, and that was where we were looking at 1170 as having some very, very strong resistance, and we can certainly see that on this daily chart that we just looked at. Let's go ahead and pull that back up. But when we look at this particular level, that level was right here. That's the 61% retracement level of this larger move, and that's where the market stalled. And in terms of this particular area here, we do have one level, which is a 50% retracement, and that 50% retracement comes in at around 1152. So it just faltered from there also. It could not even make it past there. I thought we would have the ability to at least see this market come up and test 1170 in that area. I was wrong. There's no doubt about that. Now, as far as silver goes, it has been lethargic, to say the least. Now, it is an industrial metal, so it has a slightly different component than gold, whereas gold we're looking at as whether or not it's going to be a safe haven play. Palladium, silver, platinum are really highly used in industry and therefore are going to be very sensitive to moves in the equities markets. Now, if we take a look at the Dow Jones Industrial Average and the S&Ps, they were positive for most of the morning. You can now see the S&P did close negative on the day, call it in essence unchanged, but certainly not any kind of big push. When we consider the fact that we've got the jobs report coming out tomorrow, we want to be really sensitive to that fact. Now, when we take a look at silver, we can, without a question of a doubt, say that we do have some support in the area of about 1440 right in here, and that does match up with this being a weekly chart of the low of the week. But realize last week we actually went and tested $14 again. So I am not convinced that silver has come out of the muck, has found support, and will begin to move up at this point. It's something that we'll have to see. Now, we do have a long weekend this weekend, Labor Day here, and my sense is that depending on what we get from the jobs report is really going to determine the next levels that we'll witness not only in gold and silver, but the entire precious metals complex. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up right before Labor Day weekend. Bye-bye.